All right. Matt, the mortgage guy. In today's video, I'm going to talk pre-approval tips 2022. While this thing's probably going to be good for years to come, specifically in 2022, things you want to look at, things you want to be cognizant of, getting pre-approved with the pro, knowing your budget, being weary of, pre-approvals or pre-quals that are done willy-nilly, getting a starting point and why that's so important, looking at your loan options and why you might want to consider more than one. All this ahead. As a mortgage broker who talks to thousands of people every single year, who talks to hundreds of real estate agents, sees a ton of transactions, hundreds of mortgage professionals that I'm talking to month in and month out, I want to bring you up-to-date, relevant advice that's going to help you on your real estate purchasing journey. So before I get into it, like, comment, subscribe if you want real life, real-time info from someone who's in the trenches doing it all day, every day. All right, let's get into it. Okay, today we are talking about pre-approval tips in 2022. First and foremost, I won't, beat this drum too long because you've heard it so many times. You need to get pre-approved with a professional. You need to talk to somebody who knows what they're doing, who does it quite a bit. Imagine you just inherited $500,000 from your great uncle. Are you going to go and just, find the first person who's willing to take that money and invest it for you and just place it with them? Of course you're not. Don't do that with a home purchase that's likely also hundreds of thousands of dollars worth of real estate that you're purchasing, right? Find somebody who you like and trust, who does it at a high level, who has great reviews to take care of this, big financial decision for you, which is, getting pre-approved and buying a home, right? So that's the first step. And there's all kinds of things I can get into about, why you need to get pre-approved, but I'll maybe dive into that later. On the flip side, be very, very weary of something that's called a pre-qual, or anybody you talk to who's willing to pre-approve you or tell you you're good to go out home shopping without really going into depth with full loan application, collecting of documents, pulling your credit, verifications of employment, all the stuff that the true professionals are going to do to make sure that you're not in a position where your loan's going to fall apart, where at the 11th hour, they're going to decide, oh, well, this is how your income is calculated, so we can't do a loan for you. Or, oh, we didn't know about this. Find someone who's going to do a thorough job up front to get you pre-approved. Be very wary of, click button, get mortgage, anything that you find online that talks about getting it done in 2 minutes. That's not how it works in the real world. If you want to do it that way, what's going to happen, one, your offers don't look as strong and you might have trouble getting them accepted. Or two, even worse, you get it accepted, you pay for an appraisal, you pay for inspections, 3 or 4 weeks down the line, sorry, we can't get a loan done for you. As terrible as that seems, I see it happen so much that I have to continue to remind consumers, don't let it happen to you. Get yourself fully pre-approved with a professional. Okay. A couple things that are good tips and good things to think about, in my opinion, is find your starting point, whether you're buying today, 3 months from now, or a year from now. I talk to a lot of people that plan on buying 6 or 9 months out, so no reason to talk to anybody today. No reason to have a conversation or start to game plan today because it's still a little ways out. I'll get pre-approved in September because I'm going to buy in October. The problem with that is you don't know a starting point. And in many cases, we can help coach you to where, okay, based on the information today, you'd only be able to put 3% down. And here's what you'd be able to afford. But if this debt is paid off, if this amount, you're able to save to put down, then you're in a position where you can buy a little bit more with 5% down. Or if your credit gets above this number, we can do conventional and we can do something else. All these things, if you wait until a month before you're going to buy to kind of vet this stuff out, there's no time for preparation, right? Versus have the conversation now, get yourself pre-approved and know the starting point. The starting point for you is either one, you don't qualify, or two, you do, and here's the number. It's not what you want or what you need. Okay, fine. Let's talk about what you have to do to get prepared. More savings and down payment, raising your credit score, paying off some debt, whatever that is. If you don't know where you're starting, how are you going to know how to get to where you want to be? You know, certain price point, certain down payment, all that stuff. So find the starting point. And then to go along with that and to go along with the pre-approval, know your budget. Your budget is what you know is a comfortable mortgage payment. And I implore this on folks. Don't go to a mortgage lender and say, what's the maximum I can purchase? I don't think that's the best question to ask. I personally don't even start with that when somebody gets themselves pre-approved. They tell me we're looking between 600 and 700. I tell you, okay, with 10% down, you can go up to 700, no problem. Issue a pre-approval. If they ask, hey, could I do 800? I can show you that, but I'm not going to tell you from the jump, hey, you can buy up to 1.1 million with 10% down, because you probably don't want to. You're probably able to identify, here's the payment range that I'm comfortable with. Here's something that I know fits into my budget. I've got a car payment. I've got kids' sports activities. I've got kids' school and the expenses that go along with that. And you know, 25 to 2,700 or 3,000 to 3,200 or 1,400 to 1,600, whatever that number is for you, you know your budget. Let's find what that translates to purchase price and down payment wise and work it that way. The more clear you are on that, I promise you, the more stress-free and, you know, enjoyable experience you're going to have during the purchase process. In 2022 and any year where it's competitive, it's vitally important that you know this and you know it well, because it gives you a level of confidence and a level of, you know, being able to walk through somewhere and go, yep, I've already looked at the numbers. 430,000 with 5% down. I can afford this. I know what the payment is. I'm ready to submit an offer. Your agent says, you know what? This one's going to take 445. Are you willing to do that? You might have an Excel spreadsheet that a lender has given you, or maybe you've already looked at what 445 is. Yeah, we know that up to 450. It's you know, at the higher end of our budget, but it fits within our budget. We're willing to do 445, submit the offer. Being able to quickly decide whether or not you're comfortable and willing to submit an offer is important in today's market. It's important because you don't have 3 weeks to decide. In many parts of California, in my market in Sacramento, you know, average days on market is nearing 2 weeks, right? It's 15 to 17 days. So if something gets listed and it's a hot house, it might be listed on Thursday, open Saturday and Sunday, and in contract by Monday morning. You certainly don't have, you know, time to go back and forth and, okay, do that homework up front. That way, when you walk through the house, you already know the numbers. That's something that I think more people should be doing. And I encourage you to do that no matter what lender you're working with. Know your budget, know your numbers, be confident. Then you're able to, you know, walk through a house. If it's a fit from a real estate perspective, you know the mortgage side, confident and can submit an offer. Last but not least, pre-approval tips as you're going through this. The other thing you want to look at is your loan options. I've talked to a lot of people who came into the process saying, you know what, I'm going to put 20% down, or I'm going to put 10% down. Once you've seen a few options, sometimes that changes. Man, I didn't realize that I could put 10% down versus 20, and you've got an MI Buster program where I'm not paying mortgage insurance. The only reason I was putting 20 is because I didn't want to pay mortgage insurance. Okay, here's 10% down, no mortgage insurance. Put an extra $50,000 in the bank. Maybe that's an emergency fund. Maybe that's funds used for college education. Maybe that's funds used for the pool in the backyard, the upgrades you wanted to do. You know, you bought this house and you got a great deal, but it didn't have all the things that you were looking for. You want to upgrade the kitchen. You want to do something in the backyard, whatever the case may be. 3%, 5%, 10%, 20%, 3.5%. There's so many different loan options. You don't want to go in stuck on one or thinking that you only have one option. Most people are going to have various options. When we do the pre-approval, we're going to usually pull out, here's what is likely your best option. But on tons and tons of pre-approvals, we're doing side-by-sides, either initially during the pre-approval or once someone gets something accepted and saying, hey, take a look at this, mull it over tonight. We'll submit it either 5% down or 10% down, knowing that, you know, things change a lot, right? Things might change from pre-approval to offer accepted. Things might change from 1 week to the next, and having money in the bank might be more important. Having a lower mortgage payment might be more important. That is really specific to the individual. I don't answer that, right? I provide the options, and then you tell me what's important to you. So do all this stuff. It's really work on the consumer's end during the pre-approval, but you work with the right professional, so you know you're in good hands. You do a thorough pre-approval. You know your numbers. You know your starting point. You know your loan options. And by doing so, you're going to be well prepared in any market, especially a market like this one we're in, where it's super competitive. Hopefully this video is helpful. If you have any questions at all, want to reach out to me and my team, greatmortgagebroker.com, fill out a form. We're happy to help. Talk to you soon. And who knows what's going to happen with this market, but we gonna see.